Welcome, everybody. Thanks for joining for the show Don't Tell, presenting financials that win over VCs. I'm Enzo Garza. I'm the founder of Accounting Prose, and we help SaaS founders transform their financial chaos into VC clarity. And today we're going to pull back the curtain on what really happens in those VC meetings and how to walk in prepared. If you are a SaaS founder, this is perfect for you because you need to know what to be ready for. If you're an accountant, this is also very helpful because when you're working with your clients that are getting ready to go meet with VCs, it's important to know what to have ready for those clients. So this is great for both audiences, and I'm excited to have everybody today here listening in. And I'm thrilled to be joined by Adam Lean, co-founder of the CFO Project, who's helped hundreds of companies build the exact same financial systems that VCs expect to see. Between us, we've seen every financial presentation mistake you can imagine. Some made by, I guess, maybe accountants or clients, or even maybe making some mistakes yourself. But we're here today to talk about what to avoid and what to get started so that you can be ready. So Adam, before we dive into the meat of our discussion, I'd love for you to talk about a little bit about your background and what led you to start or co-found the CFO Project.
Yeah, so thanks for allowing me to be here. This is really exciting. So I used to be an accountant, and I honestly didn't like the job of accounting. So I started on the sides, and at night and on the sides, I started my own business. This is back in 2007, and that business ended up growing. So after a couple of years, I was doing, almost around $1 million in annual revenue at the side business. So I thought I'll leave my day job as an accounting because this is just honestly way more exciting to me, starting something. And the business I started had nothing to do with accounting. So anyways, I left my day job and then I started growing this business. Meanwhile, I met a bunch of other business owners through my entrepreneur journey and realized that I had taken for granted the fact that I understood my numbers. As I was talking to all these other people, they were running their businesses without this knowledge. And then it dawned on me one day that most people who start a business start it because they're an expert at a craft, not because they're a numbers person, right? And so, it makes sense, right? Somebody that's a plumber starts a plumbing business. A dentist gets trained to be a dentist and then buys a dental practice or starts a dental practice. I mean, a chef starts a restaurant. These are people that are experts at their craft. So they thought, well, I'll start a business doing this. Most businesses are not started by, MBA grads who are putting, a pencil to paper thinking what is going to be the most successful. Most businesses are not started by those people. They're started by craft practitioners, which means they're not skilled in the number one thing required to stay in business, which is generating positive cash flow. I mean, that's literally the only thing, as you know, required to stay in business. You could have no profit for years and still stay in business as long as you have positive cash flow. Uber is a prime example of that. They've been in business for over a decade. And just last year, they turned profitable in I think the third quarter or something. How did they stay in business? Well, they had investor money pouring in, right? That's positive cash flow. The average business owner, which 99%, according to the U.S. Bureau of Labor Statistics, 99% of all businesses are small. Those people do not have access to investors investing in their business. They're bootstrapping or going into debt or, credit card, whatever. And so they need somebody who understands numbers. So anyways, I just went up to a few of those business owners that I knew. This is about 10 years ago. And I said, hey, would you like me to just meet with you once a month? And before we meet, I'll go through your numbers and tell you exactly what to do to make more money and have a successful business. They all said yes. Like, who would say no to that, right? And so I got 17 clients. I didn't even call it a CFO service. I got 17 clients within a year and a half. And then I thought there's something here. Obviously business owners need this. So I created a CFO company. I've never been a CFO before, but I realized that small business owners need something. They don't need a big business CFO, the skills of a big business CFO, but they need something. But at the end of the day, whether you're the CFO for, a large company or a small company, the goal is still the same, to make the company financially successful. So I created basically a CFO for small business firm, and that took off. And so about 5 years ago, I met my now co-founder, Jeff Prager, and he was doing something very similar. He had a very similar philosophy in terms of being a CFO for small businesses. So we thought, why don't we merge our methodologies together and teach other accountants how to offer a CFO for small businesses and make a lot of money for it. And that took off because you're going to make way more money from being a CFO for small businesses than you will for tax or bookkeeping services, because those are commodities. And so that's what I do.
Man, I love the passion that you have. That really resonates with me because I do meet a lot of people as well that started a business because they're really great at something, and then they realize later, oh my gosh, I actually have to know what the heck's going on behind the scenes. Like, am I making money? Why am I not making money? Where's my money going? And it's not just as simple as looking at the bank account and seeing how much you have left over, because that's really how a lot of business owners operate, is just what's left over. Yeah.
That's what they do.
Yeah.
People, we in the accounting profession think, oh man, my clients really want me to comb through the numbers with them and all. They don't care. Their number combing is pulling up the bank on their phone, the bank balance, saying, do I have enough money to pay the bills today? That is what they care, because they have a ton of other things on their list that they have to care about, dealing with employees and customers and making money and marketing and all this other stuff required to run a business. Accounting falls at the bottom of that pile. So we need to change how they view us, from being just a recorder of the past to being a partner that can guide them. And if you could do that, you'll be able to charge a lot of money for this service.
Yeah. So I often hear questions like, am I going to be able to make my payroll? That's a big question. Or I don't even know how much to pay myself. Should I be paying myself? Or, should I be considering changing my business around, maybe buying equipment, or just like taking on a new sales initiative? And you cannot get that information from your bank balance. And if you're not a financial person and you just look at the financials, it's like, black and white numbers on a page. It doesn't really tell the story of, where you are, where you're going, and how your future plans fit into that. And having a really fantastic CFO on your side is like, I think it's like having it like a cheat code, because you get to be like, you get to go so much faster and so much further than your peers who are still trying to like put the numbers together on a Friday night, when they should actually be hanging out with their kids or their spouse, or taking a break and not feeling overwhelmed or burned out. So having that partner, I think, is fantastic. And I mean, I love that you not only did it yourself and built something on your own, and sort of sounds like you didn't quite like stumble into it, but it wasn't like the ultimate goal. You wanted to help businesses, and the CFO practice is sort of unfolded before your eyes. And then realizing that, I'm guessing you just realized, I can't take every single client under the sun. Everybody probably wanted you to like be their CFO, and recognizing that you would make a bigger impact helping other people, in our industry really level up and become that advisor that our clients are really looking for. Like, not being the number cruncher, but being somebody who is really like a fortune teller, because deciding what the fortune should look like by making a plan today.
Right. Totally. Yeah. I realized when I was at 17 clients, I was like, well, I can't really get more clients because I don't have enough time for that. Yeah. And two, and the second thing I could do is hire other people. And that's what I did. But then I realized that the type of person that I wanted and that my clients wanted didn't have an employee mindset. They were more entrepreneurial. The best CFO is somebody that is more entrepreneurial focused, mindset focused than employee mindset focused, because they would be a true partner to their clients. So I thought, well, instead of hiring people on my team, why don't we just teach the same methodology to other accountants? They own their own business, but at the end of the day, we're all still accomplishing our mission, which Jeff and my mission is to eradicate business failure. And we want to equip as many accountants and bookkeepers and tax professionals out there to do that as much as possible. Because, I mean, if you think about somebody that starts a business, that is the thing that puts food on their family's table. Literally, it has to work. And so they are usually scared and overwhelmed and lonely because there's not that many people to turn to, and they're insecure in their ability to run a successful business. They may be the best, what am I trying to say? Psychiatrist on the planet. But running a psychiatry practice that makes money is a totally different story. And sub-psychiatry, for any profession out there that starts a business, most people are great at the craft again, but they're not great at making money from that craft. And that's why they need somebody. And when we approach them the right way, they'll say yes to our service.
So I also see this, you mentioned something before, and that accountants can make a lot of money doing this. And I think that sometimes people are afraid to charge what they're worth or charge what is like the value that they're providing because they feel like they might be taking advantage or something like that, which I don't actually think is the case. I see this as a way for the accountant to be financially viable and to continue to offer amazing services. But it's also sort of like an upward spiral of success where the business owners making money and they're happy, their family is supported. And I see that also sort of rippling out to the community because now, they're spending more money in their local community. They're able to hire, they're able to expand, maybe buy real estate. And so I think it's amazing because both people are really going to see the benefit of this, but it goes out much further than that. And I've been teaching at all these like Zero road shows where I'm helping accountants understand how to apply automation and AI in their business so that they can not only stay relevant, but also be able to offer faster insights for their clients and be able to, like, at a moment's notice, be able to give really good, timely, realistic, and correct advice. And there's sort of this notion that accountants are going to be completely replaced by AI. And that there's some fear around that. And we'll get to the financial stuff in a second, but just going to talk about this because this is like what I'm passionate about as well. I think that there's a whole other opportunity for people to serve clients in the CFO role because clients are less, like business owners are less, like they don't care as much about how it actually happened. So did you spend 2 hours or 10 hours doing this work? Right. What we really care about is what is the result? I don't really care how you got there. So if you can get to how you got there, like how you get there faster, that would make serving your clients even better because now you're not only the person who's giving advice, but it's the person who's like, in a moment's notice, be able to say, this is what you need to do next. And you become more of a partner, like you said before, a partner in their business and not just a person who's getting numbers ready for either nobody to read, which happens a lot, or ready for tax season, which happens once a year. So being more like in the moment, helping them now versus waiting until way after the fact to say, oh, actually, we're looking in the rearview mirror now. That's what happened, right?
Totally. Yeah, I agree.
Yeah.
I mean, and that is the big difference between an accountant and a CFO. An accountant looks at the past. That is their job. I mean, and that's needed. And I'm not discounting that because it's needed, but business owners don't care. Right. Business owners want, and that's what a CFO does, is forward look. Business owners would rather the financial professional in their life ensure that they have a successful business more than ensuring that the past is recorded correctly. We know that the past being recorded correctly for tax purposes and whatnot is needed. But again, business owners don't care about it. So therefore, tax practitioners, bookkeepers, accountants, if all you're doing is looking in the rearview mirror, even though it's needed, you're selling a commodity. Right. And as with any commodity, price wins. And so you can't, because business owners don't care about it, why would they pay one accountant way more than another accountant for what they deem is the same service? It's just like if there's two gas stations next to each other and one is 75 cents higher than the other, why would anybody go to that gas station, even though some petroleum expert out there says that there's a giant difference? Most people don't care, right? I wouldn't care because I have no idea about the difference between quality of gas. And that's how business owners think about accounting. At the same time, you could be the best accountant in the world and record the past correctly, and the taxes are timely and accurate and all that stuff. and your client will still fail, right? They could go out of business. It has no bearing on your job. Your job, you did the job right. You were great at what you did, but your client still failed. What's the point?
Yeah,
You collected your $750 fee for your tax return a year, but the client still went out of business. And now the client is left with all this debt and regret, and they have to go back and get a job and all this. I would rather spend my time helping my client have a successful business, and they will win because they will have a successful business, and I will win because instead of charging $750 a year for a tax return, I'm charging $2,000 a month for a CFO service. 24 grand a year I'm earning from one client because I'm helping them have a successful business, and they will gladly pay that because, and by the way, we advocate for dealing with legit, like real established businesses doing at least $500,000 in annual revenue. Those businesses will not even bat an eye at paying 24 grand a year for somebody to help them have a successful business. I mean, think about it, like a $4 million construction company, 24 grand a year, they're paying low skilled laborers more than that. Right. You know what I mean? On a yearly basis. So we as an accountant, because you said that a lot of accountants don't want to, there's this fear of charging more because you'll lose clients. Yeah, you'll lose clients if you charge more for a commoditized service, but if you charge more for something they want, it's a totally different ballgame.
Yeah, the return on investment for that $2,000 for a skilled, financial partner is much higher than a person who doesn't offer those sorts of services and advice. And it doesn't do anybody any good if the business that you're working with goes out of business. So back to that, upward spiral. Everybody needs to be doing well in order for this to work. Right. Your client, you can't just do the books and then hope for the best. Your client needs to have some guidance and feel like they actually know, like they're on the right path and that you're helping them get there. So I'm wondering, so let's talk a little bit about how you get your accountants trained up and to become CFOs. And so what different skills are you teaching them? And then at the end of the day, they have to be able to prepare and present financials that a client wants to look at. So what sort of things on the client's end are you helping them to understand to create?
Yeah. And that's a good question because our philosophy is a little bit different. We do not advocate for what most people think of as fractional CFO services. A fractional CFO service typically is where you are the CFO, like you're performing a role for multiple clients at one time. You're just a fraction of an employee, basically. So you could have 5 clients, one for each day of the week, but you're still doing a different role every single day for each of your clients, which means you have 5 part-time jobs. And also means that if one of the 5 clients has a major issue on the day you're not really working for them, they don't care about your other 4 clients. They need your help. And this creates stress and burnout. And it puts you right smack dab in the middle of what we call the accountant's trap, where you're trading time for money. So we don't advocate for a fractional CFO model. Instead, we advocate for what we call a productized CFO model, where instead of customizing an engagement for each of your clients, you're performing the same service for every client. So you have essentially one product to sell. Think of like when somebody walks into the grocery store and they see toothpaste sitting on the shelf, they know exactly what it is, why they're going to buy it, what they'll get from it, and how much it costs, right? That's how we need to present our services, like a product. When we present a CFO service, your prospect, you're a business owner, needs to understand almost immediately what it is, why they would buy it, what they'll get from it, and how much it's going to cost. And if they can understand those 4 things, they'll buy your service. They'll hire you. And so that's why we call it a productized CFO service. You sell it like a service. You sell it like a product. But because it's a service, you could charge a lot for it.
Sure.
I mean, the way so you could charge a lot for it because you're selling it like a product, selling it as a service, but delivering it like a product. And just like toothpaste, Colgate, they create the formula once and they just manufacture it 1 million times a year, right? That's how we deliver the CFO service. We have one set system that we teach you. We call it the one clear path that we teach you to perform with each of your clients. That way you don't have to reinvent the wheel. Every time you meet with a client, you know exactly what to talk about and what to do, and you know how to answer their questions. And then you could scale, because this whole thing takes about 4 hours per month per client. So the average person that we teach charges $2,000 a month. That's why I use 2,000. We according to our last survey, $2,000 a month for CFO services, 4 hours worth of work. That's around a $500 effective hourly rate. And so you could scale by getting more clients, because you could take on a lot more clients. You could delegate parts of the system to your team. You could train your team to also take on their own clients. And this is, I mean, that literally is the definition of scaling, where you can increase revenue without a substantial increase in cost. And you can't do that with fractional CFO or tax or bookkeeping, because when you take on a new client, yeah, your revenue goes up, but so will your cost in tandem, your payroll, your time, because doing taxes the right way and doing fractional CFO services the right way takes a lot of time. But at the end of the day, whether you're performing a fractional CFO service or what we call a productized CFO service, as long as the client gets results, doesn't matter how long you spend. And you just mentioned that a few minutes ago. And so why not do a scalable model? So that's exactly what we teach. And during everything revolves around one monthly meeting with a client. So we're not doing anything on behalf of the client. We're not performing any role on behalf of the client, which is one of the main reasons why liability in this profession, the way we teach it, is so low, because you're not doing anything. You're just offering advice, and it's up to them to take the advice or not. But everything revolves around a monthly meeting. In this monthly meeting, you're giving two deliverables. One, you're giving a scoreboard, what we call a scoreboard. So an easy way for a client to understand their numbers without having to understand accounting. Because we believe that a lot of accountants do a disservice to their clients by giving them complicated, accounting reports. They're not accountant. Why are we giving them accounting reports? We need to give them a scoreboard. We call it a scoreboard because when you walk into a basketball game, even if you've never seen a basketball game in your life, you could look at the scoreboard and pretty much tell what's happening, right? That's exactly how we need to present financials to business owners. They need to understand clearly all the drivers, the things that drive positive cash flow. What are the most important things for that particular client's business that they need to focus on? That will be color coded, red, green, or yellow. And then that's the first deliverable, a scoreboard. The second deliverable is what to do about it. We call it an action plan. So we'll take everything that's in the yellow and red and we'll turn it into actionable next steps. Say, Mr. or Mrs. Client, these are your 4 things that I want you to do this month, or 2 things, or 1 thing I want you to do this month. Now there's no ambiguity. They know exactly what to do. And now we're focusing them on the operations of their business, which they like anyways, they understand, rather than numbers, which most people don't like. You know what I mean? Like what's better going to a client like, hey, your cost of goods are too high, you need to reduce that, versus these 4 products that you sell, I want you to reduce your see if you can find a different supplier to reduce your cost of sales from $105 to $95 on average for each of these 4 products. What's more actionable? You know what I mean? To the average business owner.
Yeah. So are you suggesting that the KPIs or metrics on that scoreboard are the same for each client that you work with, or is it going to be industry by industry, like looking at COGS for somebody who has, does manufacturing? Like, what is normally on that scoreboard?
Normally on the scoreboard are 15 drivers, KPIs. We call them drivers. They all add up to cash flow, and they're the same for every client, every business, every industry, regardless of location. I mean, we've had clients in 18 different countries, currency and all that. It doesn't matter. Every business on earth is driven by 15 core drivers that all drive cash flow, driver influence cash flow. Now, the the importance of any one driver may vary depending on the industry, but every business on earth is impacted by these 15 drivers. Now, that appears on the scoreboard because that's a 50,000 foot view, but there's hundreds, if not thousands, of drivers that depend on the business itself. And that is part of our job, is to understand what is causing the business from generating positive cash flow or not. And it depends on the business. You could have the same business in the same city, you have two different clients in the same industry in the same city, but have vastly different drivers. You know what I mean?
Yeah.
It depends on a lot of different factors. What the client wants from their business, the specific situation that they have with their employees. I mean, there's just so many things. That's what we train on, how to understand and spot.
Yeah. So when you're talking about the drivers of the drivers, I'm guessing that would be like a leading indicator, and the driver is actually the lagging indicator. So like customer happiness would be a leading indicator, which would lead to, maybe if the clients aren't happy, maybe lower revenue because people aren't renewing contracts, or they have a higher churn, which is going to decrease their overall revenue, things like that.
Yeah, absolutely. I mean, revenue, profit, and cash flow are lagging indicators. They are.
Right.
And for example, the P&L, it starts with revenue, which is a lagging indicator. What are the leading indicators of revenue? Yeah. I mean, those are the things that are not apparent at all if you just look at accounting reports. So we can't just look at accounting reports, because our goal is to increase cash flow. Cash flow is being driven by revenue and profit, and all the other cash flow items like debt and owner draws and all the asset purchases and whatnot. All those drive cash flow. But if we take revenue, for instance, what is driving revenue? And are those the problems? Which one? I mean, we like to use an analogy that every business is a machine. And if a machine, let's say your washing machine's not washing clothes properly, you hire somebody to go fix it. What do? They take the lid off, they look at the part or parts that are the problem, and they fix it. And hopefully the washing machine is doing what it's supposed to do. Same thing with a business. If a business is not doing what it's supposed to do, which is to generate positive cash flow, you take the lid off, see which part or parts, we call them the drivers, these leading indicators, and figure out what is the most critical one to fix now, which will have the biggest impact to cash flow. Because most businesses, there's many different problems with it. We got to fix the number one most important problem, then the second most, and keep going on and on and on. And this is how you keep a client for years to come, because as long as there's a business, there's always something to improve.
Yep.
That's why big businesses
are not static.
Yeah, totally.
Yeah.
Totally.
Yeah. So I actually had a conversation with Rod Drury. He's the founder of Xero. He's one of the first people I interviewed. I've known him for a long time. I love him. And he has people coming to him asking for capital often because he has a fund. And he is interested in funding really, I think, tech forward, unique businesses. But I think that, when founders are going to go get cash, or whenever an accountant is serving them to help go get the cash, often they kind of overcomplicate it, or they over-engineer financial statements. And really the VC fund people or investors or any of those people, they just want to know, how are things going? And, can I expect to see a return? And if you're not currently profitable, because maybe you're just getting started, what is the plan of action to get to profitability? So I think even at a high level, people who are willing to fork over cash to help grow your business, they don't really want to get inundated with every single number on the planet. They want to know what's going on and have that basketball scoreboard that tells me how things are going. I love that, because that's a great analogy. I don't know much about sports, even though, surprisingly, I was a cheerleader as a kid. I did a lot of Pop Warner. I had no idea what I was yelling about, but I could look at the scoreboard and know that, we were winning or losing or tied or whatever. So it doesn't need to be something that's overly complex if it still gets you to the answer, which is what's actually going on. Are we okay? What's happening next? Yeah.
Yeah. I think that's a big mistake when people go and pitch to fund, to really anybody. When it comes to numbers, even if your audience are numbers people, and definitely if they're not numbers people, the one thing that really resonates is if you can tell a story with using the numbers as the backup, but if you could tell a story with the numbers that makes sense and that shows that you have a command over the numbers and that you have a plan, especially if the numbers aren't looking too good. But if you could tell a story that resonates with your intended audience, so if you're looking to get funding, the worst thing you could do is go in there and just dump a bunch of data in your audience's lap and expect them to figure it out. It's like going, to your neighbor and just dumping a pile of dirty laundry at their doorstep. Like you're causing more work for them, which is what you don't want because you want them to give you money.
Right.
You have to be able to tell a story that's concise and clear. The author, Donald Miller, have you heard of him? He wrote
StoryBrand.
Yes, StoryBrand.
Yeah, I love StoryBrand.
Yeah. He has a famous quote: "If you confuse, you lose." And he was talking about in the context of marketing messages, but same thing with numbers. If you confuse with your numbers, a lot of people I've witnessed, they will in an attempt to seem smart, they will rattle off a million different metrics and at a mile a minute, and they think it looks impressive. But if you're confusing your audience, they are going to tune out, and they're not going to do what you want. I mean, it's just as simple as that.
Yeah, I think that rattling off a million numbers at once just comes from a place of fear. I'm afraid that people are going to think that I don't know what I'm talking about, or that I am going to get rejected or whatever. And really, when I was talking to Rod, he has very little time. He's a very busy guy, even though he's now, I'll say retired, but he's got a very full life, like windsurfing and going to all kinds. Yeah, he's still doing his own, like investing and everything. And he doesn't have an hour to listen to you pitch. I'm guessing he doesn't have an hour to listen to you pitch.
Yeah.
He wants to know, like, in the next 10 minutes or 5 minutes, tell me what I need to know so that, I can go do the research later. But if you can't tell me in those 5 minutes, what's, what am I going to get out of this, or what's the next step? It's just like, okay, I'm done. I don't have the time to like sit here and get pitched for an hour. It's just not going to work.
You have to be inspirational. And that's what I mean by telling a story with the numbers, like paint your business in a way that's inspirational and motivational. I mean, I know this is cheesy, but like Shark Tank, the TV show, like there's a reason. I mean, obviously they're trying to make good television, but there's a reason why the elevator pitch is, like 90 seconds long, but it's entertaining. It's engaging. It gets people's attention. If they went in there and just combed through the numbers, and I mean, it doesn't make for a good story,
Yeah, just imagine you're going to the guys and gals on Shark Tank. Like, here's my 30-page prospectus and my 50-page financials, and let's go through this mind-numbingly boring thing.
Right.
They are going to be like next so very fast.
Totally.
Yeah, I am too fragile for that. By the way, I could not do Shark Tank or any reality show. They would reject me, and I would just be so very sad.
I feel the same way because I don't think I could make good television.
No, I'm not built like that.
Yeah. But even, and this is the same message I would give to a CFO for a small business. If you want to communicate effectively to your client, because remember, these are small businesses, they're not numbers people necessarily. Also, you have no control over them. They don't have to do what you say. So if your goal is to get them to take your advice so they'll improve their business, you have to communicate in a way that resonates with them.
Right.
You just have to. That's why, like I remember in college, I took a calculus class, and the guy teaching it was a brilliant mathematician. You could just tell. I was terrible at the calculus, but he couldn't teach a fish to swim. Poor guy. You know what I mean? Like you could be a brilliant CFO. You could be the CFO for Coca-Cola right now. But if you can't get a small business owner to understand and get motivated enough to take your advice, then you'll fail at being the CFO. Even though you're brilliant because they're not your employees. They're your clients. They don't have to do what you have, what you have to say. And that's, a lot of accountants over the years come to me and they're like, I know what my clients' problems are. They just won't listen to me. I'm like, well, yeah, but that's still your fault, right?
Yeah. Yeah. So it sounds like you're maybe guiding the newly minted CFOs to have these difficult conversations and
Yeah.
motivate their clients to make some improvements. I would say, and maybe I'll generalize a little bit here, but not all the accountants that I know are the most extroverted, or they're probably just a little bit more on the shy side, or less forward. So how do you take somebody who might have those I don't know, qualities and characteristics, or fears about voicing their own thoughts and opinions? I mean, that's pretty common. How do you get somebody from there to being that good storyteller,
Yeah.
person that people want to listen to?
Yeah, that's a really good question. And I'm not an extrovert. I'm an introvert for sure.
Yeah.
But it actually works, in my opinion, it sort of works to your favor because business owners can really suss out who is genuine or not. And also business owners don't like sales pitches just in general. And so if you come across as salesy, or you're slick, that's a total turnoff. But if you come across as somebody that's just really trying to be helpful and really wants to help, and if they know that you're a financial professional, both of those things together, they'll listen to what you have to say, because there's not that many people in the business owners' lives that they could turn to for help. So if they know that you're a financial professional and you come across as genuine and want to help, you don't have to sell anything. They will want what you're offering. And so it actually works in your favor if you really do, if you're not faking it, if you actually really want to help.
Yeah.
But the same thing also is that we teach what we call, we didn't come up with this, but we teach this concept called the competence loop. The competence loop. Most people think that they need to have confidence before they actually take action. Like, before I advise a business owner, I need to have confidence that I can do it. Well, nothing in life starts with you having a confidence, right? You are enough confidence to do. You have to develop the confidence and the competence, and both of those things, having confidence and the competence to do something, all start with you taking action. Like when you first learn to ride a bike, you probably didn't have the confidence, and you definitely didn't have the competence because you didn't know how to ride a bike. So what do? You get on the bike and you try. And the more you try, the more action you take, the more competent that you'll be. The more competent that you are, the more confidence you'll have, which means you'll take more action. And that's why it's called the competence loop. The more instead of starting with having to have enough confidence or enough competence before you take action, instead of starting there, start with taking action, which will build your confidence, and build your competence, which will build your confidence, which allows you to take action. And so we have baby steps for the people that we teach. Just do these baby steps. That will build your competence, and then you'll have way more confidence and to actually help business owners.
Right. Yeah. So I learned how to ski when I was, I don't know, in my early 30s, and I'm in my mid 40s now. We're not going to say how old I am. But I had to just do the same, which was seat time. So I had to go out and just get on the slopes and, try my best. Sometimes I cried under the ski lift and everybody saw me, but whatever. Nobody's going to see like the moments of your doubt, when you're in the privacy of your own office. But I mean, like you said a minute ago as well, that your clients are going to know that if you're a helpful person and you want to help them, this is your life's passion, which it sounds like it is for you, definitely is for me, that like they're going to, I think, also help you along the way, help build your confidence along the way, because they'll be receptive to what you have to what you have to tell them, and those difficult conversations, if things are not going so well, if you have an established relationship with your client and you feel comfortable talking about the more challenging parts of their business, then it's going to be fine. I think once you get past that, I think it'll get easier and easier. But you have to actually put that seat time in and build that muscle. It's like going to the gym. It's like baby steps every day to get a little bit better.
That's right. It's just discipline and consistency. And the other thing we have to realize is that as long as you're a financial professional, you most likely know more than the average business owner when it comes to numbers. And even I'll say this to bookkeepers too, because a lot of bookkeepers struggle with imposter syndrome. You probably know way more than your clients when it comes to numbers. And so leverage that. Your clients want that. They want your help. So you actually do a disservice to your clients if you don't share that information with your clients. You just have to share it in a way that makes sense to them. And that it has to be important, enough to share, because if your client's time is precious, and if there's something that can improve their business and you don't share it, you're doing a disservice to them.
Yeah. And I think that accountants might actually know more than they think that they know once they
Absolutely.
actually start to put this into practice. To like, oh yeah, this actually makes sense. It's just thinking about it differently, or like presenting the information differently. And with those baby steps as well, the same thing is on the client side. Improving their business is going to be baby steps as well. You're not going to have a business that's not doing so hot today, and then it's going to be like the best thing on the planet in a month. That you're going to have to make those incremental changes through the action plans that your accountant lays or CFO lays out for you, like decreasing costs or increasing your what you're charging for your services or your products. Those things take time. You have to actually build on those things, and it's like sort of snowballing to where everything becomes a much better business over time.
Yeah, absolutely. 100% agree.
So you mentioned having a scoreboard with lots, I think, would you say 50 metrics or
15
how many metrics? 15. Okay, that's way better. Okay. So you don't have to go through all 15, but what are some, like just a handful of some of the metrics that you think are the most important for a CFO to track on behalf of their client?
Well, so for example, revenue, the revenue drivers, there's 5 main drivers that drive revenue: leads, average transaction value, conversion rate, purchase frequency rate, retention rate. So leads, the number of qualified people that are interested in your business, multiplied by the conversion rate, how many leads you're able to convert into an actual customer, will give you total new customers. Mm-hmm. And then you take your existing customers and multiply that by retention rate, which is the third driver. And that gives you total existing customers that purchase again. You take total new customers plus total existing customers that purchase again and multiply that number by the purchase frequency rate, how many total customers purchase in a given year, and then multiply that by your average transaction value. That gives you revenue. That literally adds up to revenue. So if you're wanting to influence revenue for your clients, change one or more of those 5 drivers. And then each of those drivers in and of itself have their own drivers, like leads. There's a bunch of drivers that drive leads, marketing drivers and conversion rate drivers, or things like, sales metrics. And I mean, but those are just 5 examples of drivers that drive revenue. And, some of the main drivers that drive expenses obviously are cost of sales. And then we break the expense into 3 buckets: payroll, marketing, and just overhead expenses. And then, some of the main cash flow drivers, things like the purchase and sale of assets. Like if a roofing company buys a truck, that's an asset. If they use cash for that, that doesn't show up on the P&L. It's on the balance sheet. And that's what confuses a lot of business owners. They're like, I don't get it. Yeah. But that impacts cash flow, right? Owner draws and distributions, the use of debt, the paying down of debt. I mean, those impact cash flow. Inventory, the driver to measure inventory, we try to make it as easy as possible. So we measure the days in inventory instead of measuring like inventory turns or average inventory value. we measure days in inventory because it's an easy number for business owners to understand. The average, if you have a retail store client, the average item set on their shelf for 90 days, last 2 months ago, and then last month, 70 days, that means they improved. And that's easy for a business owner to digest. Receivables, that's another cash item that doesn't show up on the P&L. That's why you can make a construction company can make money. And this is where construction, service-based businesses, for example, will get tripped up. They're like, well, I made a profit, but there's no money in the bank. You're telling me I made a profit based on the P&L you sent me, but there's no money. What happened? And it's hard for them to understand, but drivers like days sales outstanding help. How many days does it take to collect from your customers? If that number is way too high, then maybe that is the one thing you want your client to focus on this month. And we need to reduce from 120 days down to something realistic, maybe going from 120 to 100 days, just improve by 20 days. The ultimate goal may be to get down to 40, but you can't do that in 30 days. Just get down to 20 days and then help guide your client to figure out how to do that. That's the type of stuff that will impact cash flow the most.
Yeah, I have seen some clients of mine have really long AR days and really short AP days. They end up becoming a bank for their clients, but their vendors want to get paid immediately. So there's this like really large gap between money coming in and money going out. You've got money going out much faster than the money's actually coming in, but the financials look good because it says that they have revenue on their books. So getting people to understand like you need to switch your AR days around is such a simple fix. If you don't realize it, it could bankrupt you because you're not going to have enough money to pay your bills or pay your people. And the way that you describe the drivers for revenue. So, who are, what's your lead? Like how many leads do you have? How quickly are you converting them? How long are you keeping them? How much are you charging them? Things like that. That really takes a mystery out of what's actually going on. It's not some sort of magical, am I going to do okay this month? Will my numbers look good? Can I improve? These are the steps. You need to improve this, which influences this. It's like sort of a domino effect. And, right. And I can even see people sort of mapping it out. Like, maybe you don't want to have the busiest business in the world because you have other goals. Some businesses want to have tons of people on their team and expand rapidly. Others want to have a nice home life and not have to worry about dealing with employees and all the other, trouble that comes with that. So sort of mapping out what do I want from my business, and these are the ways that I can get there. If I have this many leads, I charge this much, I take this many clients on, this will be the net result. And so you can sort of dial it up or dial it down depending on what you are actually looking to get out of your business.
Yeah, absolutely. And that's where it's so important to understand what your client's goals are, because every business owner on earth is their own version of success, what they deem as a successful business. So we have to take that into consideration on top of what we deem as a successful business is one that's generating positive cash flow. So both of those combined are what we need to do for our clients.
So are there going to be different dashboards or scoreboards for different parts of the business? Maybe a founder or president versus a sales leader versus, somebody who's more in the operations? Yeah,
potentially. The average business that we teach, the average size business that the CFOs that we teach have, they're usually not that sophisticated. They're usually around $1 million to $5 million in annual revenue. Mm-hmm. And at that size, they don't have robust teams, but some do. And yes, we definitely, I know I've created specific scoreboards for different people, but a business doing $1 million to $5 million annual revenue is usually still owner led.
Right. Yeah, they're not going to have as much like hierarchy in the business, right. Or like the organizational chart is going to be pretty flat at that point. Yes,
very much so.
Yeah. Okay. So are you then suggesting that they track the metrics over time? So, lead to conversions, things like that, and be able to see over the past 3 months, we started here, now we're here, the efforts are actually working, or is it just the result that you're tracking?
No, we track both, but we track them for ourselves. So if you're the CFO for a business, you track it, but we don't necessarily reveal that data to clients unless it's needed. Because if you overwhelm clients with data, they're going to get overwhelmed. They're not going to do anything.
Yeah.
So we found over the years that it's better to give them less data and only data on what you want them to change. So for example, if there's a client, if one of your clients has a revenue problem, and then there's no point in showing them anything else, expenses, cash flow throughout the month, unless they ask for it. I mean, of course, if they ask for it, but most businesses don't ask for that.
Yeah.
Only at the meeting, only dive into the drivers. Say, look, if you want them to increase conversion rate, for instance, show them just the conversion rate. Like, look, for the past 4 months, it's been trending down, and that's a problem, because that means if the trajectory continues, your revenue is gonna drop significantly. So that's the number one thing I want you to focus on this month, is increasing your retention rate. Actually, that, as an example, many years ago, I had a client in the mitigation space. If a house flooded or it caught on fire, they would come in and sort of mitigate it, the repairs. Anyways, before we met, they were hyper focused on revenue, and they were growing like gangbusters. And they even had a billboard at the baseball stadium, and they're paying a lot of money for that too. I started working with them and realized that they didn't have a leads problem. They had a conversion rate problem. And they were just focused on how many phone calls they could get and how many appointments they could set from new customers, potential customers. But they had plenty of leads coming in. They just weren't converting them. And it's because they sent out a tech person, a project manager, or an operations person, not a salesperson. They sent an operations person to go meet the homeowner. And as you can guess, because they're not a salesperson, they didn't really do a great job at selling the prospect. So I was like, why don't you actually get somebody that understands how to talk to customers to go out and meet them, and you'll get the job. And so they actually did that for there was 3 partners. 2 of the 3 partners went out for the next 90 days themselves just to experience it, and their conversion rate skyrocketed, which means they could reduce their marketing spend because they didn't have to get as many leads, while their revenue increased. So their expenses went down while the revenue increased. And this dramatically increased profit, thus cash flow. And that was just from just identifying one particular driver.
Yeah. I think that's interesting. I'm guessing that the tech went out and probably over explained, what was going on, and probably just, just like offering a financial statement that has way too much information.
Right.
I'm guessing the homeowner was like, this is a lot. And then on the other side, if they had hired a very salesy person who was, didn't have their best interest in mind, it would be like too slick and just, again, a no. So they found the good sweet spot, which is let's solve your problems and move forward with this, project, but not be too salesy or too technical.
Totally. But yeah. even without going that far, they were, without even understanding, let me back up. Without somebody like me, and I'm not saying another CFO could have come in and probably identified the same thing, but without somebody like me, they would have still been on the same trajectory of let's spend money to go out and get leads. And they wouldn't have been focused on the sales problem. So it's like our job, a client may be fishing in the entire Atlantic Ocean. Our job is to say, I want you to just fish at this 100 square foot section of the Atlantic Ocean. You'll have a much better result. And that in and of itself it gives them so much clarity, and that gives them a peace of mind too. You know what I mean? It's somebody giving them direction.
Yeah. I like that a lot, that idea a lot. So let's say that I'm a business owner looking to find a CFO that has all the skills that, I'm looking for, and can put it together in a really nice, scoreboard, type format. Where should they be looking? What sort of questions should they be asking? Because they also want to find somebody that they feel like can understand them. So how do they even find that person to begin with?
Yeah. Well, you're talking about a business. How does a business owner
Yeah,
find
how does
that
a
person?
business owner? Yeah, so like on the CFO side, I mean, they could put their hang their shingle and say, "This is what I do," but they
Right.
have to be found. How does somebody find them and suss out, are they right for me?
Yeah, that's a good question. There's not really an easy way to find for a business owner to find it, but we've we've talked to a lot and surveyed a lot of business owners over the years. They don't even know something like this exists, and that's
Right.
half the problem. Is that they just don't. I mean, why would the typical business owner, let's say somebody who's a lawn care company, they're not Googling, I need a CFO. They don't know what a CFO is. They, they think, well, Microsoft needs a CFO, not my $2 million lawn care business. Um, if they've heard of a CFO, they immediately think head accountant or expensive accountant. They're like, oh, I have a bookkeeper. Or Susie does she's my office manager. She does the books, the QuickBooks or whatever. And there's no context for what a CFO is. So it's very difficult for a business owner to find a CFO. And that's part of what makes this so lucrative so appealing to accountants, is because this is almost like a blue ocean space. If an accountant or bookkeeper or tax professional, if you can present your messaging to business owners in a way that resonates, like if you essentially say, would you like my help understanding? I'll comb through your numbers and your business every month and tell you what to do to have a more successful business. That gist of a message, if you could go out into the world and just bang that drum, you'll get all the business that you can handle, because this is a blue ocean space.
So it sounds like you're familiar with StoryBrand and Donald Miller, and
Yeah.
what they talk a lot about is sort of the hero's journey. So you're trying to help the client, or help your potential client understand how you can get through the arc and on the right side of where you need to be.
Right.
So I assume that you want to put the language or put your marketing message in a way that somebody will search for. So they're not going to be searching for CFO. They're going to be looking for somebody to help them in some capacity. So
Right.
on the flip side, if you're an accountant getting into this type of practice and you want to speak the language of the person who's looking for you, what should your messaging look like?
Yeah, that's a great question. You should speak to the benefits of a CFO service, not the features. The features of a service are things like ratio analysis and forecasting and budgeting and trends assessment and all these things that a business owner couldn't care less about. Instead, but they're needed to perform a CFO service. They just don't care about them. Instead, if you could speak to the benefits of having a success of hiring a CFO, hiring me, or hiring you to be their CFO, the benefits are things like having a peace of mind, having a go-to financial guide to bounce ideas off, to answer questions, have somebody to help you make decisions, because that's a huge stressor. One business owner, he said, my experience being a business owner is I'm making a bunch of decisions I know I'm not qualified to make. And I think that's true for a lot of business owners, that they're overwhelmed. But if they had somebody that understood the big picture, that could help them make decisions, they love that. Things like, should I raise my prices? Can I afford to buy a truck? Can I afford to hire somebody? All those questions, you mentioned several questions earlier. So selling the benefits and not the features. It reminds me of a Harvard marketing professor. He coined this saying that people want to buy. You've heard this, that they want to buy people don't want to buy a 1/4-inch drill. They want to buy a 1/4-inch hole.
I think I have heard that.
Okay. And his whole point is that somebody that wants a hole in a countertop, that's their vision. That's what they really are buying the drill for. They're not buying the drill just because they want another tool in their garage. And that's exactly the same with CFO services. They're not buying you or hiring you because they want another financial professional in their life. They're hiring you to get some result. And the main result, if you boiled it down, every business on earth wants to have a successful business. And a successful business is defined in two ways: however they define a successful business. Some business, not every business owner is driven by money. Some are driven by having control over their time, being able to take off a bunch of time, being able to donate money to charity. Every business owner has their own vision of success, but we also need to help them accomplish our definition of success, which is having a business that's generating positive cash flow. If you could do that, that cash flow, that positive cash flow will solve whatever the client wants, the business owner wants for their business. Cash will solve literally any problem. If you have a leadership team problem, more cash can help you get better leaders. If you have an employee, if you have a product market fit, maybe your latest product flopped, having more cash allows you to test and fix things. I mean, this is why small businesses struggle, because they just typically don't have enough cash. And that's our North Star.
Yeah. So I'm like in my head singing, cash rules everything around me. Cream, get the money. Dollar bill, y'all.
Yeah. That's funny.
Cash is king. Yeah, it is. It's so important.
That's right.
So this has been a really wonderful conversation. I feel like I could talk to you for many, many hours. But alas, I have to let you get back to your day and get our audience back to their day as well. But I'm sure that they have taken a lot away from this, because I know that I have. So I'm wondering, are there any final thoughts that you have about maybe an accountant getting into this field, or a business owner finding that person? Any thoughts at all?
I would say to accountants, if you're wanting to have a bigger impact on your clients' lives, and you want to do something that's more interesting than just doing taxes or bookkeeping, and you want to earn more money, this is one of the ways to do it, because you're able to charge way more for advisory services than you are for just recording the past. But if you could do both, if you could record the past and be, a CFO advisor to your clients, you'll be their one-stop shop. And that means you could take on a lot less clients, but keep the clients that you're able to charge more for, which means you could dump some of those low-paying clients, which we all know are the clients that typically pay the least amount are usually the more problem clients.
Noisier ones.
The noisier ones, right.
Yeah.
And which means you'll have a better work-life balance, and you can finally enjoy your work again, and you could escape what we call the accountant's trap, where you're trading time for money.
Well, and I love that you're also saying that an accountant does not have to figure this out on their own, that there's a system that's already built and ready for them. They don't have to figure it out and get stuck in that like freeze state where, you need to make an impact. Your clients are asking for this and need that support, but you just don't know where to start. It sounds like they can skip all the stuff like that, go straight to the answer, get trained up, and be able to use their expertise that they already have built over the years of being an accountant and actually create some positive change in their client's life. So I love that. And I hope that anybody that is interested in leveling up their advisory practice or accounting practice and become an advisor, to reach out to Adam Lean. Should we find you on LinkedIn, Twitter? Like, where should we find you?
I am on LinkedIn.
Okay.
Not on Twitter or anything else, but LinkedIn, just Adam Lean, or our website, thecfoproject.com. My email is adam@thecfoproject.com. So pretty easy.
Awesome.
Easy to
Pretty
find.
easy to remember. Okay,
Yes.
great. So reach out to Adam if you are at all interested in this. I appreciate everybody for joining us today. And until